afternoon, everyone, and happy Monday. It's Alyssa Corm and Ken Shreve here with a look at the stock market today. We are going to break down the divergence that we're seeing in the stock market. Tech stocks clearly still getting hit pretty hard out there, Ken, but there are other areas that are still looking pretty good, and we're going to take a look at some names in that area. What do you think?
So much selling in the Nasdaq 100 today, so we're going to take a look at three non-technology names. Take a look at Westlake Chemical, used car retailer CarMax, and also Dick's Sporting Goods, which is reporting earnings tomorrow morning.
All right. Well, first, let's take a look at the leading action in the market coming from blue chips. The Dow gaining 1% for the day, hitting new high territory in intraday trade before coming off here a little bit. Meanwhile, we had the Russell 2000 also up today, up some 0.6% or so. Meanwhile, the S&P 500 lost about 0.5%. And as you mentioned, Ken, the Nasdaq, and especially the Nasdaq 100 getting hit really hard, but the Nasdaq Composite down 2.4% for the day. So if you were just looking at the Nasdaq alone, feels like we're definitely in correction territory, but a huge divergence here with blue chips.
Yeah, I mean, no question about it. You're looking at the Nasdaq and the Nasdaq 100. There were, a huge number of stocks down 6, 7, 8, 10% or more. Semiconductor stocks just getting crushed today. So, but when you look at the S&P 500, the Dow, the Russell 2000, it's not looking too bad. The S&P 500 gave back some of its gains today, but we looked at the Dow Jones, which hit an all-time high, helped by another huge day for Walt Disney. So it was interesting on IBD Live this morning. It was like the market was just serving up all these buying opportunities outside of the technology sector. And a lot of people saying, well, the market's in a correction. Why are you buying stocks? And you just have to kind of move with the market here and understand where the strength in particular industry groups are, and just take a little nibble positions and see how it goes. But clearly, technology is not the place to be right now.
That's right. And a great approach there to managing that portfolio and trying some new buys during this time. But before we move on, in terms of the NASDAQ here, what are we thinking? It might take a while for tech stocks to repair their charts, maybe to form bases. So we'll have to read the big picture column for more on what investors should be thinking in terms of the market direction, but kicking off the week with some interesting divergence.
Yeah, we're in the very early stages of a rally attempt for the Nasdaq. You can see a big gain for the Nasdaq on Friday, kind of reversed off its low and closed higher. Still ended below the 13,000 level, and it rose a little bit today and turned lower. So the rally attempt is intact for the Nasdaq, and as long as Friday's lows hold, the rally will be intact. So we'll be looking for a sign of strength for the Nasdaq going forward. If we get it, it's very questionable if there's going to be a lot of new buys in the technology sector coming to the fore. There's been a lot of damage done to a lot of the stocks that led the market in 2020, and a lot of these stocks are going to need to build bases, consolidate gains further, and but there's just a lot of strength elsewhere in the market. The reopening trade is alive and well, and a lot of stocks out there acting well.
That's right. Tech out of favor. That's exactly why we are looking for new leadership elsewhere. So let's start off with a look at, that's not the right one. I want to look at WLK, different West stock, Westlake Chemical, WLK. Yeah. Had a strong day, up over 4%, heavy turnover here. A lot of volume has really been coming into this stock, Ken. We have earnings out of the way. the fundamentals are turning around here, some really strong bottom line growth. And this is a stock that has been on the move since last summer, and a nice breakout today.
Yeah, maker of polymers and plastics. A lot of chemical stocks have been doing very well. Not the most sexiest of industry groups. You can see it's got a composite rating of 62. So ratings wise, a lot of these stocks that that are outperforming now just don't measure up ratings wise. But you can see Westlake has a very nice looking relative strength line, meaning it's outperforming the market. And you can see over the past 2 weeks or so, a lot of accumulation in this stock. Look at all the above average volume weekly price gains. It culminated with a breakout today from a fairly well-formed cup with handle base above the 50-day moving average. The buy point was 90.46, 10 cents above the high point of the handle. So, good, solid name and a good outperformer today.
That's right. And Westlake, our stock of the day today,
That's
relative
right.
strength line at new high. For more, go check out that article on investors.com. And CarMax is another name on our radar, ticker KMX. This stock strengthened throughout the day. It looks like from the early going when we were looking at it, it was up a little bit and ended up closing up about 4.6%, Ken, slightly above average volume. And this big move today comes on the heels of some really tight action for the stock.
Yeah, no doubt, and another good relative strength line, despite a relatively low RS rating of 68. But again, a lot of these turnaround stories, a lot of these reopen stocks that lag the market for a period of the time, their RS ratings are not going to be as high as we'd like to see them. But when you've got that relative strength line and new high ground, this is just and people often ask, what's the difference between a wide and loose kind of weekly chart that shows a lot of erratic price swings, and what's a weekly chart that shows good tight trading? This is a classic example of tight trading, strong institutional support. You can see a breakout from a consolidation, pull back down to the 10-week moving average, forms a nice little tight flat base above the 10-week moving average. So this one is in buy range still from the buy point, the 128.68 buy point, and closed just a few cents above the buy point, but good solid move for CarMax today. And this is an industry group that's got a lot of leading stocks. You can see these Market Smith charts. You can see who the leaders are, the group with the strongest RS ratings: Lithium Motors, LAD, Carvana, Group One Automotive. So pretty broad leadership in this group.
Yes, and some solid action there, as you mentioned. And let's wrap things up with a look at Dick's Sporting Goods. Ticker is DKS, reporting earnings, but it's showing strong action heading into that report. A nice upside reversal at the 50-day on Friday, a gain of 7% today, heavy turnover, and this is potentially an earnings options play for investors.
We actually put this on leaderboard as an earnings option trade. We went kind of far out to, I think it was the March 26th expiration. So we're going to give this one a little bit of time to work, but it was reasonably priced. And obviously there's optimism after two really impressive quarters for Dick's Sporting Goods. You can see at the bottom of these Market Smith charts, 2 straight quarters of 20% plus top line growth, triple digit earnings growth. And this quarter that they're going to report tomorrow morning is also going to be strong. What's interesting here is that they've got a new CEO in place that just took over the reins from Ed Stack, who led the company for 35 some odd years. His dad founded the company many years ago. So Lauren Hobart is the new CEO. She's got a lot of respect, has the company focused in the right areas. So this could be a very interesting earnings report, and had a nice little breakout over a little trend line today ahead of earnings, and we gave it a shot as a earnings option trade earlier today for leaderboard.
Yeah, and Dick's boasting a composite rating of 93, which is good to see. I just wanted to check and see if it happened to have any sponsorship. Yep, Fidelity Contra Fund with a position. So that's interesting to note as well, putting it in that leaderboard upper echelon category.
Exactly.
We like seeing all of those different elements for stocks that we put on leaderboard. So thank you for that, Ken. We'll keep a close eye on this one tomorrow as it reports earnings. Thanks for bringing these stocks to our attention and all of your analysis. And thanks to you all out there for watching. You can be sure the conversation is going to continue tomorrow morning on IBD Live. We're going to be sharing our screens, talking about the market direction, how you should be posturing yourself as an investor with the market conditions that we're having. Some really interesting divergence once again, Ken. On the one hand, all of the stocks that seem to be really working last year are not working now, and we're getting this new batch of leadership.
Yeah, I mean, the market is working just the way it normally does. I mean, we've been talking about there were a lot of excesses built up in 2020. It's not often that you see the Nasdaq up 40% plus in a year, and so we're seeing a lot of these stocks come back really hard. Again, when you're looking at technology stocks that still have a chance to lead, you're going to want to look at these pullbacks that are in the 25-30% range. Some of these stocks are pulling back, 40-50% or more off their highs. These types of stocks probably don't have a good chance to resume their market leadership, but I'm sure there will be some technology stocks that keep their pullbacks contained and could see their day in the sun again. But overall, the technology sector just under so much institutional selling pressure, and that's, like you said, paved the way for some new leadership here. And you got to just listen to what the market is telling you to buy and start small. And market's going to tell you if your timing was right or not.
And we're keeping track of it all every step of the way on this show. All of our coverage on investors.com, as well as IBD Live, investors.com/IBD Live for all the details on that. That's it for today. Thanks so much for watching, everyone. We'll see you back here tomorrow.